Hi, everyone, this is Robert, Wave Options, U.S. market update. As you can see from the background, I am traveling on my laptop here, so limited computer access. It's also 1 in the morning, Saturday morning, as you can see from the look in my eyes. But I did want to get in front of you and talk to you about the markets because I felt like what happened Friday was important. And what happened Friday was that PCE report that came out. That's the Fed's favorite inflation indicator. We'd certainly had some squirrely market days going into that PCE report. But the gist of it is it came in kind of in line. There were fears that it was going to be a little bit higher than expected, especially with all the Fed speak we had with the governors coming out stating that they weren't afraid of hiking rates again. I'd actually thought Powell might get in touch with them and say, hey, even though you mentioned this in the Fed meeting minutes, let's not come out and talk about that. And so we actually broke down in the markets. So we take a look at the chart of the S&P. You can see how the markets got into that report on Friday. On Wednesday, we came right down to that support line right at 525. And then we broke below it on Thursday in front of that number as there were fears based on the Fed commentary throughout the week that the Fed wasn't afraid to, at least some of the governors weren't afraid to hike rates again. And the market seemed to be a little bit nervous moving into it. Thursday, we broke below that level. But if you've been watching, you know that one day doesn't mean anything. We have to have a second day, a follow through or confirmation day. But we closed below 525 on Thursday, waited for that PC report on Friday morning. It came in basically in line. So it wasn't hotter than expected. Personal income rose, but spending dropped. So that shows that the consumer is maybe not so interested in spending so much anymore, which would certainly affect the economy. But without a higher reading on the inflation side of things, especially with the ex-food and energy part of the PCE, the market seemed to like that number. Kind of less fears now of rate hikes. Now we may just start looking back to when to expect the rate cuts. I don't think it'll be before the election, but it was enough to get the market back above 525 on the close. So no follow-through day below support. We're right back above it. Now we have to do the same thing on the opposite side. We have to see what happens on Monday. Can we close higher on Monday back above 525? If I put the moving averages on, you'll be able to see that we were able to even recover that 10-day moving average on Friday. So back above support and back above the 10-day moving average, almost just a test of the 50-day moving average on the low there on Friday morning before we rallied into the close. All right, so let's take a look at some of the rest of the markets. This will be a little bit abbreviated. As you saw on your screen, we aren't showing as many symbols, but as a reminder, if there's a particular stock you're interested in, you go directly to it using the chapters feature on this video. Interest rates is the big thing that we want to look at. So we're going to go ahead right into looking at the TNX. And here we can see that we did get just a little bit of a break back on rates. We had been moving up. That was what was causing the problem in the market. But back down Thursday, we kind of backed off a little bit, but then a big move down in rates on Friday. I've been noting that I hope that we stay in this range here between the 3 and the 4, but that still is a well-constructed 5-wave pattern. Let's hope Friday was not an outlier if you're long the markets. We do stay in this range rather than moving up in that 5-wave pattern, because if rates turn and start heading back up again, we're going to break back down below that 525 level. So it'll be all about rates. If we take a look at TLT, might as well just do interest rates all at once. I know you guys ask about this a lot. And when we look at TLT, this is one that you guys ask about on the comment section. And just as a quick reminder, when you watch these videos, each and every month of this year, we're giving away one of our free level 3 subscriptions. That includes our AI-based impulse strategy. That's our directional strategy, which has been doing really well, even as the market's been going up and down here and even correcting just a little bit. Volatility strategy, which is breakouts of triangles, and our time strategy, which is sideways, more income-based trades, also based on AI. So here's the TLT, which is a little bit longer on the curve. The TNX is showing rates on the 10-year. TLT is pricing on the 20-year, so it does give us a little bit further out. So I thought that was good to look at, and you can see a big move up here on TLT. So that means rates move down a bit on the longer end of the curve as well. So all those are positive if the market wants to turn and continue to move up towards that 550 level, which is a reminder is where the C wave extension on the zigzag pattern lies. So leave a comment underneath this video. Very last chance to get in this month's drawing. You can say anything, ask questions. Love to read your questions and comments. I read them all. Time and travel permitted, I'll answer as many as I can, but enjoy having those. And please, let's work on moving the subscribers up too. So hit that subscribe button as well. Let's see if we can't push towards 50,000 over the next couple of months here on the subscriber side of things. You know how it works. It's quite helpful. All right, so let's look at the dollar and see what the dollar did on this move. And as you can expect, the dollar did move down just a bit. So that's what we want. We don't want that dollar moving back to the upside. And actually, the dollar kind of hung in there pretty well down here around this wave 4, even as rates were moving up. But it's also a well-constructed 5-wave pattern, as you can see. So we still have to have that concern about potential for rates to move up in a wave 5 and the dollar to move up, and then all the goodwill from Friday will go away. But the next few trading days, specifically Monday, as I mentioned, whether we get a follow through is going to be really key and important moving forward on those. So let's take a look at some of the other markets. The Dow had broken down significantly into the number on Friday. It was the worst of the 3 markets as far as a performance standpoint. Big breakdown here, vertically down below the 10-day moving average, almost 2 vertically, gapping. Well, we closed both those gaps on Friday with the move back up. However, on the DIA, we are not back above the 50-day moving average or the 10-day moving average, and we're not back anywhere near the level needed to hold, which is 390 had to hold, but the main level was up here under 400, which was where we had gone sideways last week, and we needed to stay above that level, which was the previous wave 3 high. But you could also look at this and say, well, maybe the Dow's done. If the wave 5 was over, which it was, we moved back towards the previous 4, which we did on Thursday. So perhaps we're setting up for a brand new impulse pattern on the Dow. The correct back towards the previous 4 when a wave 5 ends, if the wave 5 doesn't extend more than 100%. So maybe the Dow is still the leader, and the rest of the markets will follow. So look at the Qs. You can see that same scenario here. The Qs look very similar to the S&P, except that Thursday we did not break below the support level. However, we did close below the 10-day moving average, and we got back above that support level on Friday, but did not close above the 10-day moving average, which was interesting with rates backing off. We just hit the 10-day moving average on the high of the day, so we'll be looking very closely at the Qs as well on Monday. Looking at the IWM, kind of in this 5-wave pattern here, I would argue, surprisingly, that the IWM may have performed the best of the markets when we were worried about that PC report and rates moving up. They hung in there pretty well, just pegged on that B-wave correction as well as the 50-day moving average. We're back above both the 50 and the 10 on the IWM. Can we go up and test that 210 level again? That will be key to look at. Looking at the VIX, that's a commentary about the VIX. We had that expanding triangle. We broke to the upside. We got about as much of a move to the upside as you would expect. It wasn't that large of a triangle. And now we're right back down towards 12.5 again. That's what happens with triangles. You know, you get the breakout and then you come back to test the point. So it looks destined to try and test 12.5 again on the VIX. So perhaps that was the end of that upward breakout of the triangle. And we just move forward with the market and hovering around this 12.5 level. Taking a look at Bitcoin, still same scenario here. Can't get above 70,000. At least we're holding around 65,000. The range had been up to 70. back down to 60, as you know, if you watch these each and every week. And we're just going through a really nice consolidation here, right around the 10-day moving average, but above the 50-day moving average. So the folks that I go to for more expertise in the whole crypto world tell me the normal post-halving, and they expect the break to move to the upside soon. We had the news on ETH where that Ethereum ETF did get approved. You can see that we're still forming the triangle here on ETH, also consolidating above the 10-day moving average and right at that 10-day moving average, or right at the 10-day moving average at the point of the triangle. And we'll wait and see about the breakout there. So perhaps we're setting up for an upside breakout, but we have to remember that any type of a triangle can break either direction. So perhaps we move the other way. We'll wait and see. I did want to bring up EGO. That was one that y'all asked for. So we'll look at that for gold. Just kind of right above the 10-day moving average. I think EGO is a good place to play gold and the metals. So y'all ask about that one. And it looks pretty darn constructive. We do have a wave 5, though, that's extended 65% and got into that tap box, the time and price projection. But it looks solid to move higher. So when we see that, we want to look at the DMI and see if it's constructive for a move higher. And it is. You can see the ADX is above 20. So right around that 25 level, still separation between the positive and negative directional indicators. And if we are going to start looking towards cuts again, I think we could get a renewed move higher in the metals. EGO, we'll look at SLV. I know you want to see that one as well. And holding in there pretty well. A little bit of a downward move there, as you can see on Friday, but also consolidating right around the 10-day moving average. We did technically close below it, but we could get just some consolidation from that big vertical move that happened in mid-May and then turn and move back higher. I just have to wonder how high silver can go with the move that it's had already. You can see that C wave extension of the zigzag is right at the top of the tap. So both of those are agreeing that we get up around 30 to 31 on SLV, and that could be the end of it. Looking at USO for oil, you can see that it kind of still in the middle of this expanding triangle. With my travels, all I can do is say that there are plenty of people on the road. It doesn't matter whether I drive all night. I drove on the Memorial Day holiday when the markets were closed. That's the only time I drive during the day is if the market is closed. But we looked like we were going to move to the upside, and we came right back down. So just when I thought maybe we're going to get an upside breakout out of that expanding triangle in oil, right back down into the trading range. So we can still go either way on oil. We'll just have to wait and see which way that all plays out. So that's going to be it. A little bit more of an abbreviated session, but I did want to get in touch with you because that PC report was so important on Friday. So I hope everybody enjoys a great weekend, and I look forward to talking to you again next week. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.